What's good, traders? Today we're doing a full top-down analysis on Soxx because this market is reaching a very important area structurally right now. A lot of traders are trying to predict tops and reversals, but prediction without confirmation is where traders get trapped. Price is still the final authority, and semiconductors are still showing signs of institutional strength overall. At the same time, though, risk is increasing as this move becomes more extended. So let's zoom all the way out first and start with the monthly. The monthly chart is still structurally bullish overall, but the market is beginning to enter a more parabolic phase of expansion. Price has accelerated aggressively higher with very little meaningful cooling underneath. That kind of vertical movement can continue longer than traders expect, but it also increases the risk of sharper pullbacks once momentum finally slows down. Right now, the trend is still intact, but the higher this market pushes without building support underneath, the more vulnerable it becomes to exhaustion later on. Now, dropping down into the weekly, the trend becomes even clearer. The weekly chart has stayed in a strong expansion phase, with buyers continuing to accept higher prices. Sellers still have not produced a meaningful bearish break of structure, and pullbacks continue getting absorbed instead of collapsing lower. That's important because weak markets usually fail to reclaim structure. Strong markets defend it. At the same time, the weekly is becoming increasingly extended. Momentum is strong, but the farther price stretches away from meaningful support, the more sensitive the market becomes to volatility once profit-taking finally appears. Now let's move into the daily, because this is where the active battle is developing. The daily chart still reflects confirmed markup behavior, with buyers defending higher prices overall. The major demand zone that launched this recent expansion sits between 530.17 and 541.89. Once buyers defended that area, Soxx expanded aggressively higher and never really lost momentum. Now overhead, the major resistance area sits between 572.95 and 584.50. This is the key zone I'm focused on because it's where the next major decision likely develops. If buyers continue accepting price above that resistance area, semiconductors probably continue squeezing higher. But if sellers begin rejecting price aggressively there, we could start seeing early distribution behavior develop. Not confirmed yet, but definitely something traders need to monitor carefully. Now, dropping down to the hourly, the picture gets more specific. The hourly chart shows buyers recently defended the zone between 558.11 and 562.50. Pullbacks into that area continue getting absorbed relatively quickly, while selling pressure has looked weaker than the expansion candles higher. That's usually continuation behavior during strong trends. But this is where discipline becomes critical. Price is no longer sitting deep inside demand. It's pushing higher toward overhead resistance. So while momentum still favors the bulls overall, the location for fresh longs becomes less attractive unless price proves it can continue accepting higher levels cleanly. Now down to the 5-minute. The 5-minute chart did produce strong continuation buying late in the session, and buyers clearly showed up. But the important distinction is that the move happened after expansion, not directly from deep support. So while momentum still looks bullish, the quality of location for aggressive entries becomes weaker unless another clean confirmation setup develops near support. That means right now, the market still leans more toward observation mode than aggressive execution mode. The overall structure remains bullish until proven otherwise. Sellers still have not produced a confirmed bearish break of structure on the higher timeframes. Until price proves that, calling for a major collapse becomes dangerous. For tomorrow, I'm watching two major scenarios. First, buyers continue defending 562.50 and attempt another push toward 572.95 and eventually 584.50 overhead. Second, sellers begin showing real rejection at resistance and the market cools off before deciding the next directional move. Either way, semiconductors are approaching a very important decision area. Remember, cash is a position. No trigger means no trade. A trader's job is not to predict every move. The job is to wait for price to prove the move first. Appreciate y'all for watching. Stay patient, stay disciplined, and let price confirm before committing capital. The market will always provide another opportunity. Stay sharp.